So here we are. You're making some money, you've got some creations, and so you've decided. First step, you're going to get your business name. Then you're going to figure out your legal entity. I recommend an LLC if you can do it. Maybe then you get your employer identification number. That usually takes a little extra time. I hope you have your domain name purchased as well, preferably as a .com, and you have a business account set up with your local banking institution. Almost all of them, by the way, have some kind of business checking of some kind. Hey, this is KB. I'm a technologist, thought leader, and self-published author. I've been publishing ebooks, print books, audio, video, and other content online since 2015. I stumbled quite a bit, tried many different types of content, marketing strategies, software tools, and social media streams. Now I'm here to help you learn from my mistakes and find inspiration along the way. We'll take a journey together to leverage your content, dive into practical tips, and test out actionable strategies that move you from posts to profit. This is the Self-Pub Empire Podcast. So, what do I mean by business ready? Are you business ready? You're working to get from posts to profits. You're trying to figure out, how do I get there? And really, should I have a business? Or what does that mean by having a business? I'm just a creator and I put stuff out on the internet. But if you really want to have profits, you really do need to be business ready. And that is a combination of knowledge and activities to get you started. I was really excited about preparing for this podcast today. I worked through a number of things in my notes and a little bit of research, and it reminded me of a number of things, in particular in my own journey on starting a business, and really with where I started, self-publishing books and creating a business just for that purpose was very instructional, and it forced me to learn a number of things. So I'm really excited about sharing that today with you a little bit and some of the things that helped me along on my journey. Many people are creators. They're posting things on the internet, and they don't really have a strategy to get where they want to go with such a thing. They post, and they get some viral content, and they get some interesting likes and shares, and it feels good. And that's fine. If that's what you want to do, I don't have any problem with that. But if you're a creator and you really want to get an actual business going, creating, providing, impacting people's lives, you really do want to be business ready. You don't have to do the legal part of this right away. You might want to make sure that you have a product or something that you are going to sell that you have created and ready to go. You might want to do that first, but we'll get to that in a little bit. It's okay to be a creator and not have a business, because sometimes you have to get creating and get that creative juices going and get started somehow. Again, you're not an expert. You're just beginning your journey. I have a friend who's really good at making pottery. She's extraordinarily good at making pottery. It took her a long time to get there, though. She had to practice a lot. She did not start a business until she felt that she had something appropriate to sell. She had kiln time that she had to purchase. She did put some things into the business ahead of time. But once she got going, she was able to start selling this pottery, which was fantastic, glazed and really very nice. And then she incorporated a business over that so she could run her expenses against the business. And I'll talk about that a little bit too. So are you business ready? It's a couple things, right? Knowledge and function and structure. Some viral success occurs, and these longtime creators, they've either prepared beforehand, or as soon as things really started to take off, then they incorporated their business. That does happen, and could happen to you too. Didn't go that way for me. I actually started to write the books, and then when I was ready to publish, then I created the business piece and those legal parts. And I learned a lot along the way. Doing that, those legal parts, there's overhead, there's some fees, and so on and so forth. Don't let that turn you off. Those things are part of doing business, and the long run gains, if you're really serious about this, are much better than the short-term overhead and investment. So why bother? Why even incorporate or create a legal structure or learn anything about business? Well, if you're here, you know that you want to go from posts to profit, and that means you need to be prepared. But let me talk about a couple of resources that I really enjoyed in my journey through becoming a business and getting online and doing the things that I did. And some of it's going to sound a little cliche. The first one I'm going to point out, which has a bit of a mixed reputation to some degree, but it is the number one, I think, if I'm correct, the number one purchased book on self-help and financial education, I think, in history. And that's the Rich Dad, Poor Dad book by Robert Kiyosaki. He has an entire business around cash flow and the ideas in the Rich Dad, Poor Dad book. It's very story-oriented. It is actually a fairly quick read, has some great diagrams in it and things that you can look at. And they talk about really how these things are, driven by human emotions, greed and fear do drive people. And he has a number of stories from when he was young about learning about how to be rich or how to be poor, being an employee versus having a business. Cash flow is a huge discussion in the book. There's a lot of pieces on that, along with some nice tips on things that we would call these days a side hustle and how to do that. As a side note, I recommend doing any kind of online sales or work like this, or being a creator, product-based or electronic-based or ebook-based or whatever-based, as a side hustle. You do want to have some funds. You do want to work and make sure that you have some funds to keep you going. You don't want to just quit. I can talk about that sometime in a later podcast. So a side hustle is discussed in there as well. There's some interesting keys in there. One of the big keys that came out of that book that I noticed right away is there's a lot of talk about employees versus owners or business owners. And an employee is someone who ends up, of course, paying tax on their income first. They don't even see the money, and the money goes right to the government. There's a lot of history there about how that came about. We're all used to this, I think. We've all been paid and have been taxed on our income. So that income tax comes out even before you see it. And then you get to spend what's left over. So as an employee, that's the very basics of what he talks about. A corporation, on the other hand, that is an entity that you can own yourself. A corporation will spend their revenue first on expenses, and then they get taxed on what's left, called profits, of course. I'm going to repeat this because this is important. A corporation will spend money on expenses like raw materials, and I'm going to use an example, raw materials first, and then get taxed on the profits of what's left. Okay, so what does that mean? So for my friend, pottery maker, what that means is before she incorporated, she would purchase the nice expensive clay for making the pottery out of her pocket money from her regular job. And then she would practice and work on creating her creations. And then she would sometimes sell them privately, of course, without having a corporation. Anything she made, in theory, she would have to report to the government as income and be taxed in the entire amount sold. So let's say a piece of pottery, like a mug, sold for $20, she would be taxed on the entire $20. With a corporation, she could purchase the clay, which might have cost her $5, sold the clay pottery when she's done for $20 and only get taxed on $15. That's really important. And that's how corporations work and why it's important to have something like that as an entity if you're going to scale and actually do business. And that's why people do it. The great news is that making a business entity is a lot easier than it used to be. So that's the start of being business ready. And it's a very key point in the Rich Dad, Poor Dad book. Another piece, and maybe I'll do a full breakdown of the book in a future podcast, because I think it is an interesting book and there's a lot of good points in there. But 3 things that will help you that are in the book, more than just being a creator, to help you really get from post to profit. And that's knowing what cash flow means, because a lot of people say this, and I think they still do. Cash is king. You can function with debt, of course, but really flowing cash and making sure you have that cash is really, really important. And it is the lifeblood of the company. If a company's out of cash, the company's out of business, or in receivership, or all kinds of crazy complicated things that we can talk about some other time. Systems, understanding systems. This is important for scale for any kind of creative business. Let's go back to the pottery example. Her pottery is great, but she's one person producing the product. She can't scale. She can create pieces and sell a bunch of pieces over time, but truly her flow of what she can actually make and sell is limited by what she can do herself. And that's okay, because that's exactly what she wants. She wanted a fun business on the side, selling pottery and making it because she enjoys the process. Would she scale that business? She probably wouldn't. She probably wouldn't do more than that. But someone could if they had a mind to do so. And I've seen these. I've seen some, what were they called? They're plates that had images and artistic writing and things on them, and they were mass produced from the original. So artists do this as well, right? They will create a piece of art and they'll sell prints. That's a system to scale. It's not necessarily a system to have manufacturing facility in China, but you can do it that way. Another type of system is your website. I want to talk about that in a future podcast as well, because that's something else you own, and that's intellectual property, and that can turn into an asset. We'll talk about that too. The final thing to talk about is people. I don't know as a creator that you're going to need a lot of people to help you with the business, but that is what that means as far as in the book is concerned, and how to work with people and those kinds of things. It's a little bit light on those, but that's okay. And that really, those three things, that means real business. And you can then do the things a real business does and understand how a real business will scale and sell a wide variety of things. Again, it works for pretty much any kind of creation business that you want to run. Another book that I really enjoyed is the granddaddy of all self-help books, and that is the Think and Grow Rich book by Napoleon Hill. This was Napoleon Hill's research project. He talked, I don't know how he was able to, he talked to magnates of business at the time. And these were like huge businesses, US Steel and things like that. I think, trying to think who else he had talked to, but I would say go ahead and check that out. It is a boiled down basics book. That's one of the brands that I have, is a boiled down basics series. And these are summary books, and you can check those out on Amazon. You can check them out on selfpubempire.com/BDB, and we'll have the links in the show notes too. But we did a summary book on Think and Grow Rich by Napoleon Hill, and there's a lot of details and pitfalls. As a side note, I really want to comment on this. There's a lot of tricky bits, I would say, in publishing a summary book on Kindle Direct Publishing for Amazon, KDP for Amazon. They are very, very careful about making sure that you're not plagiarizing and you're not trying to run on the coattails of the original author. And they want to make sure that this is a summary book by you as opposed to the original author, Napoleon Hill. And you could talk about that. Some people have been very successful with summary books. I have too, a little bit to some degree, and I think they're very interesting and I like them. And part of it is because then I can create a summary or read a summary myself for something that I find very interesting. So you can check that out. We'll link that in the show notes. But Think and Grow Rich really is the grandfather of really all the self-help books, since it is about money. The message is pretty simple, but multifaceted. If you're listening to this as a creator, you're already using your mind to create something. And that's the think part. Think about what you can provide. There's some interesting mantras and other self-help kinds of things in there about motivating yourself and self-discipline, but really more about self-discipline and not giving up. It is motivational. It is inspirational. It is written in a slightly older tone because I think it came out in the 20s, if I can remember correctly. And it can really help you get from post to profit. Maybe not directly, but in general. And what you can do to gather people that are like-minded, talk about things. People do tend to do well or better with what he called a mastermind, which is people getting together to talk about business and think through ideas and things about that. So there's a whole bunch of information about in Think and Grow Rich. It definitely helped me. I enjoyed it. But as a creator, you're already using your mind. That should help. You have to think. Okay, so we'll get down to some brass tacks here. You are your greatest asset. And I want to really emphasize this. And your time is your greatest resource. Money really isn't even your greatest resource. You can turn time into money if you do it right. You can turn time into just about anything else. Happiness, joy, an empire, whatever you want to do, you and your time, those are your greatest assets. So why are you incorporating? Why are you creating a business? You can capture that or contain it. I like capture a little bit better. You can capture that asset of yourself and your time into a business entity. And that's what it's for. It allows you to do a number of things. So as an example, for example, we've talked about people on social media doing things and so on and so forth and possibly going viral. Mr. Beast, most of you probably have heard of Mr. Beast, Jimmy Donaldson. He is probably the biggest YouTuber on the planet. I think he beat out PewDiePie a little while ago as the time of this podcast. And even before that, he really has been a huge YouTuber, somehow cracked the code about what people were interested in watching, and is extraordinarily popular. He's a YouTuber. He's got a YouTube channel. He's just a huge entity, has a big impact on a lot of things. And, really a lot of people on YouTube look up to him as a nice person, of course, and someone who does all kinds of interesting things in philanthropy and stunts. Now, the interesting part is that he was made an offer some time ago that was $1 billion. That's with a B, 1 billion for his channels. That's plural. The important detail when I was reading the news article on that is the offer asked him to include all of his content on YouTube so that ownership would change hands and, I quote, associated companies. So wait a minute. So he's a YouTuber, independent guy, and he took off, got popular, very, popular on his YouTube channel, but he probably didn't incorporate right away. But once things started to happen, he was making money. What did he do? He incorporated a company, not one company, but multiple companies, associated companies. He's big enough that he has multiple ventures on different things. I would imagine, not that I would know, but I would imagine that he has a company for every kind of product that he's trying to put out there. He probably has one for each YouTube channel. I think he has more than one YouTube channel, and one for each of those, and one for any kind of things he does. Like Mr. Beast, I think he's got candy bars. So I think he's got some candy bars and things like that he's been coming out with, and so a wide variety of things. Mr. Beast burgers, I heard about that too. So he has companies that are different ventures. Each of those is individually separate to some degree. And I'm sure there's a more complicated ownership because, again, he's got tons of money with this channel and this persona that he has online and popularity that he's gained. So he can afford to create multiple things. You don't need to do that. You don't need to create multiple business entities. You need just one once you really get going. But there you go. He's done that. So he's translated his popularity into assets that could be sold. In theory, he could have said, well, no, I'll sell you Mr. Beast's burgers and you can buy that for $1 billion. And he may have been able to do that, but he didn't. He decided not to sell any of it. He didn't think it was worth it. I think he's probably having way too much fun. That'd be my guess if I were to take a guess at that. So he's created these entities, these companies, and these really are the general definition of an asset. Each of them makes money for him and is saleable, and someone could buy it. And really, what are they buying when they're buying this asset? They're buying the name, say Mr. Beast Burgers. Let's say that's what it is, right? That's the company. They're buying the name. They're buying the marketing clout around it, and they're buying the customer base that purchases it, and that to some degree goodwill. I don't think he would ever do that because if you separate that up from the originator, I don't think anyone would really want to buy Mr. Beast Burgers that weren't really sponsored by Mr. Beast, but just had his name. You never know, though. And he never did that, though. He never cut that off. So that's an important point, is that you're an asset, and with a company, you can turn yourself, you can contain that into your time and as an asset and a money-making entity that you could potentially do something with later on. So this is when I'm going to put in my disclaimer for the podcast, because I am not authorized financial advisor or legal analyst or legal advisor or attorney or fiduciary responsible type person. So I am none of these things. However, I am going to tell you about my experience and advise you on what I've seen, and hopefully this will help you on your way. If you have some seriously pertinent questions, I encourage you to do research, but if you really want to have some expert advice, might be worth an investment to do. I personally did not need it. I don't think that most jurisdictions, I'm going to use the word jurisdiction a lot in the United States, that'll be a state. Every state is where you really incorporate. The federal government doesn't care that much about it, as much, I should say, but there are caveats to that, of course. So for details, you will have to review that information in whatever jurisdiction you're in and check that out. The interesting part, the cool part is in the last 20 years, the internet has really changed creating a business process. I've actually done this a couple of times now, and one of them was over 20 plus some odd years ago. I actually had gone to an attorney. So this is one of my stories, and in some ways a bit of a mistake. But at the time, the internet really wasn't in the full force that it was now. Resources weren't as available. I actually went to an attorney, and he wrote up articles of incorporation, actual legal documents. They were pretty old styled. I can still remember them. He was probably upwards in his career, pretty close to retiring himself. So he was doing things pretty much the old fashioned way. And these were articles of incorporation talking about all the different aspects of the corporation itself. And then a caveat to that add-on, not a caveat, it was an addendum, was to make it an S corporation. So I can talk about that too, but it was a normal C corporation, and then it was added on to make it into an S corporation, and it cost actually a fair amount of money to do because it was an attorney's fees, and he actually had gone through and done it. And I had gotten that advice from someone else way before the internet had put out so much information and way before states had added a bunch of information. So a huge amount of things have changed within the last 20 years. Each state usually has a very helpful website to guide you through the specifics of what you might need. I highly encourage you to go do that for your legal entity to figure that out. So why would you want to do this? We're going to go back to that because of taxes. Taxes is really, what it is that is what the government cares about. So they're going to actually make sure that they have a lot of business friendliness information or business friendly information, or make their environment more business friendly as much as possible in your jurisdiction. That is what I've seen the trend. They wanted to make it much, much easier to incorporate so you can run a business. And why would they bother? Why would they do that? Well, your state wants you to create a business. They really do. They do create wealth. Businesses create wealth, and potentially they employ people. That raises the standard of living and generates tax revenue. Tax revenue being the most important thing. To a government, that's the government's lifeblood, right? Is tax revenue, so they can continue on. Hopefully, the goal is, and I believe that most states have a altruistic goal of making sure that they put that tax revenue from businesses back into allowing people to create more businesses. And it's a virtuous cycle. And I really think that they try to do that. I think they want to do that. And most states are trying to get more and more business friendly all the time. And the internet really has helped that. It just made that whole process a ton easier. Okay, so step by step, let's start your business. This is where you want to pay attention, or you want to, if you're driving, don't start writing notes, but check the show notes, and we'll definitely have that. So first and foremost, you need a name for your entity. And I think it's funny because you can really be a lot more loose with the naming of that entity than they had in the past. So the law actually, I think, states that the entity is supposed to imply or have some kind of relation to what it is that the company actually does. That's a much looser thing now because we just can't do that anymore. How many pottery making companies can you call something with pottery? It's not that simple, for example. So do some research. You may have a handle on your social media platform. That's okay. Most of the time, that's going to end up being unique, but only unique on that social media platform itself. So your handle on one might be taken on a different one. So your TikTok handle might be unique, but if you want to go to Instagram, your Instagram handle might not be the same thing, or it's already taken by someone else. And so an easy way to know if you have a handle or name that's already taken, of course, is to look on those social media sites. You're going to want to think about that. But more importantly, look up the .com domain name, or just take your name of what you're thinking and type it out and add .com on the internet and see if it's there. If it is, you probably don't want to use that name. There are implications with that as far as trademark. You can have a name. This is, again, not legal advice, but from my understanding, you can have the same name of a company as long as they're in two different types of products. That will work. You can have the same name for two different companies as long as they're selling different kinds of products. And there's really no conflict because there's no trademark infringement either, because it's two different places. It's two different things. So you can check on trademarks as well. But if it's a .com domain name that's open the way you want it, you might want to go snatch that up and get that registered so you've got it. And you don't have to worry too much about it. And honestly, all you probably really need is a .com. In years ago, real quick, as a side note, many people went with .com, .net. They grabbed whatever they could to try to eliminate confusion. Certainly for the big companies, that's important. You don't want to see big companies with someone having their own name as .com and then the same name being .net and causing confusion. They certainly don't want that. For you, if you're a solopreneur or an entrepreneur, probably doesn't matter as much. .com, though, is still the granddaddy and the most important domain name of them all. It just is, and there's no way around it. There are many, many, many more companies now using the other domain names. Radio-oriented things are .fm, or sound or audio things are .fm, things like that. But generally speaking, a .com is what you're going to want to shoot for if you can. You can also check on trademarks too. There's a free government website. It's the U.S. Patent Office's website, and they have trademarks too. They don't just do intellectual property patents. Again, it just needs to be unique, like your social media handle. And the link to that's going to be in the show notes. But generally speaking, you don't need to trademark something. If you get bigger, you probably want to. I have a pretty good feeling that Mr. Beast is probably trademarked. No offense, Mr. Beast, but probably trademarked. So other people can't use that either. And of course, a trademark doesn't mean that they can't use the name. What it actually means is that the owner of the trademark has legal recourse to sue them for damages, and a much more strong case if you have the trademark. Side note, I don't think you need a trademark, but you can look, and that helps. So once you have a name, which might take some work and it might needs to be related to what it is that you're going to create, pottery, whatever it is, structure, or books, structure. If you did not incorporate somehow, you are a sole proprietorship. That's tricky, and I don't recommend it. And no one recommends having a sole proprietorship. Very few people do it. But as soon as you start selling something, you can be considered a sole proprietorship. That means you have full liability. And it also means that you have all of the tax disadvantages that we talked about before. So I don't recommend that. But if you want to do that for a while, just to see if you can start generating income or generating some cash flow, that's not a bad idea. That way you don't have to do the overhead of creating a business. Depends on how serious you are or where you are in your journey. Since I knew I was going to have books and I needed to have a company name for the Kindle Direct Publishing, as I'm trying to say here, Kindle Direct Publishing, then I did it anyway. So I knew I was going to use it. So I did that. So a bunch of other things. Depending on your jurisdiction, you're going to see the ability to make partnerships or LLPs, corporations, a C Corp and an S Corp, an LLC, which is a limited liability corporation. And of course, the sole proprietorship, which really you're not actually creating. It just happens if you start doing it. Corporations are the big dogs in the field. A C Corp is the standard. Anything that is a public traded company is a C Corp, generally speaking. Might own a bunch of LLCs to do other business pieces. Could be very complicated. I don't recommend a C Corp because it's made for having stock and ownership and being much larger. You can always change. It's really fine. An LLC is what I prefer. My state made LLCs very easy to make, and it's all online, and it's very simple, just like I was talking about before. It's a limited liability corporation. Usually you can do single owner or manager. You're the single owner. You can walk through that. And they are pretty much the fastest way to have a corporation that's actually a fully functioning corporation. As a side note, from what I've seen, the federal government, IRS generally speaking, considers the S Corp and the LLC the same. And why is that? Because from their perspective, an S Corp, I talked to the C Corp, an S Corp is a pass-through organization when it comes to taxes. A LLC is the same thing. It's a pass-through organization when it comes to taxes. Why is that important? Why is this a big deal? Again, corporations get taxed on their profits after their expenses. So those profits go to you as income, and you get taxed on them on your personal tax filing. That's important because it gets taxed at your personal rate. Some people in the past for example, would have a C Corp, they would do the same thing. They would get taxed on their profits after expenses, and then they would pay themselves those profits. The problem is that a C Corp gets taxed on those profits right away, or not right away, but right as soon as they are filing that. And then the payment goes to the owner of the C Corp. So you got taxed twice. So no one really does that unless, again, you have a lot of employees and stock and all these other things. It's a completely different topic. So an LLC is pass through. And your tax income rate actually could be pretty good. And it's really considered part of that normal filing. It does probably take a little more work than usual for a filing because you're going to have to file certain specific things about your business and have a profit and loss statement. Those are pieces that are important as well. And you may think to yourself, well, I'm really not making any money, so why am I doing any of this stuff? Well, that's fine. Get your filings first, like I said before, and then get your legal structure as things start to ramp up. That's really okay. And yes, there is overhead. And yes, you do have to have a profit and loss statement for your tax filing. And a comment about the profit and loss statement for tax purposes, it's a must. You'll have to have that. And I have a bookkeeper that does it, and it's relatively inexpensive, but it is overhead. So it does take some work and some money to get that done. Next thing, licenses, permits, sales tax. These are very real considerations. Every locale is a bit different. The nice part is that, again, there are many tax preparers or bookkeepers that can help you with these, and a ton of information online in most states and in most governments. These have guides on what you need and what you need to file. Usually filings are every year for licensing or permits. I'll tell you, in my jurisdiction, it's $20, and that was it. And I think to start, we'll see it was $20. So really not significant. Don't drink some coffee. Don't buy some, extra coffees a few days a week, and eventually you'll have $20 to spend on your LLC. So the next part about this, I kind of recommend this. I did this just in case, and I like to have it because I can use this number. If you think you'll hire folks, though, for sure, if you're going to hire people, you think you're going to scale and get big, you're going to want an employer identification number from the IRS. So that is the federal government. That's where they do care. This is like a social security number for your business. So it's the same idea. And you can use that for a number of things for identifying the business rather than using your social security number. If you're trying to get credit cards through your business, I'm not going to say yes or no whether you should or shouldn't do that. Certainly the EIN will be okay, but they're probably going to want your social security number anyway, because they're going to, if it's a new business, they don't know how much credit the business is worth. So they're going to use your personal social security number and your personal credit rating for those credit cards. But the EIN is nice to have for a wide variety of reasons and use cases for that number. For example, the next step in our step-by-step here is to open a designated specific business bank account somewhere. I can't stress this enough. This is a huge deal. You really, really want to do this. If you're in business, you're going to do this business, and you think that cash flow is beginning to happen, and it is, you're selling things, get a business bank account. This maintains clarity between your personal expenses and your business expenses. And business expenses is really where it's at. If you are making a lot of money with your creations, there's a wide variety of things that you can expense that have to be plausible, of course, to the business, but you certainly can do so. So a friend of a friend is a traveling accountant, and they work all over a region in the state, and they drive a ton. What's interesting about that is they have to travel. They don't get everything electronically. A lot of times they'll have to do paperwork and receipts and things that are still on paper. And so they travel. And so what do? They lease a vehicle because they feel that they need a good vehicle, brand new, that's steady, and, because they're doing driving study and it's very good. But they also know that they have steady income from the business. But here's the thing. That lease is paid for by the business. It's very plausible because they travel for work. And so they lease that vehicle and the business pays that lease. So if you think about that, that's a pretty large expense that basically comes out of the business on money that is not taxed yet. That money flows from the business and the generation of that money right into that lease without going through taxation. So it's actually really useful to think in those terms for that business. And this accountant, of course, as an accountant, of course, they know all this, right? So I just go with what the experts do and I just copy what they do. And that's exactly what they do. So it's paid for before they actually get their taxes against that income. And so it's taken off right off the top. Comes out, and it comes out of the business account too. So that's the other thing. So the money being paid in goes to the business account. The money being paid out for expenses, such as the lease of the vehicle for their driving, gets paid out of it too. Remember, expenses has to be plausible for this kind of work this kind of thing to be correct. The government kind of frowns on it being, something that isn't useful, but I'm not sure. I don't even have a good example off the top of my head. But certainly as an online creator, over time, you can figure out what kind of tools you want to start using. Maybe you have some video recording tools that you're going to use or video editing. You can expense that from your business rather than pay that out of your pocket. So I'm going to continue to talk about that. So those are the steps. And you want to make sure you do your yearly filings as well. Get some advice. Do your research. So here we are. You're making some money. You've got some creations. And so you've decided. First step, you're going to get your business name. Then you're going to figure out your legal entity. I recommend an LLC if you can do it. Maybe then you get your employer identification number. That usually takes a little extra time. I hope you have your domain name purchased as well, preferably as a .com, and you have a business account set up with your local banking institution. Almost all of them, by the way, have some kind of business checking of some kind. You've done your research on your fees and your permits. You've checked on your sales, wherever you're selling or however you're selling. A lot of the online selling tools out there will aggregate and handle sales tax for you. That is what I've found in the business of selling books on Amazon. They will handle all the sales tax for me. That's extraordinarily helpful because every jurisdiction has a little bit different sales tax. And certainly the sales tax is calculated from the place that is purchasing that particular thing from you. So if you're selling something on Amazon and it's shipping a book out to somebody and they're in a completely different state, it has to calculate the taxes for their state, county, and so on and so forth. And they do all that work for you. That's a huge benefit you don't have to deal with yourself. So brick and mortar, those kinds of things, those kinds of businesses, brick and mortar, whatever, sales tax is local to your whatever location you're in. So whatever your retail space is, that's where your sales tax is going to get calculated. That's the point of sale. And you have to handle that yourself and send that money into your jurisdiction. There's a lot of places that'll help you with that. So, don't be shy, look it up and you'll be able to figure it out. So it's really okay, if you don't have a sales tax licensing thing. It depends on the state. So every state's a little different. So you have to do some research on that as well, but not bad to have and certainly not time consuming. So there you are. You put these things together. You've got your presence. You've got your domain name. There's a bunch of other steps to really start working towards from post to profits. But this is getting yourself business ready. You've done some research. You've educated yourself on the basics. You thought about profit and loss statements. You've kind of looked up those information, a lot of information out there. We'll even have some of that in the show notes for you to check out. And you can check out some of that free step-by-step pieces in the show notes online, links in there. Check that out. I really hope this has been helpful for you. I really wish you the best in your success. I don't see this topic discussed much. I do wonder about that sometimes, but probably because everyone has a little bit different take and every jurisdiction's different. But I certainly hope this is helpful. Follow some of these steps, get business ready and get educated, be prepared to be serious about your business and go from, like I'm trying to do all the time, posts to profit. Hey, congratulations. You just listened to another episode of the Self Pub Empire podcast. I really hope you found something inspiring, useful, and actionable for your own entrepreneurial and business aspirations. Let's keep connecting as solopreneurs, authors, and online creators of all kinds. For more information, how-tos, great tools, and show notes for the show, head over to selfpubempire.com/podcast. Until next time, let's continue moving from posts to profit.